For more on the current state of the markets, we're joined by Sarat Sethi, DCLA managing partner and portfolio manager. He's also a CNBC contributor. I was racking my brains. Has Sarat been bullish or bearish? And I realize what a genius you are because I have no idea.
Well, I would say that, we have a diversified portfolio, Joe, and to the point that you made, look, we're taking some money off the table on some of the winners. They've done really well, and it's time to kind of look at some of the fallen angels or stocks that are going to do well. We're in a rising rate environment. The economy is slowing. The Fed is causing the economy to slow. So I want to be in areas that have not participated in this rally. Tom was talking about the home builders, but you look at some of the some of the stocks in the technology world, they're great companies. I still want to own them. But when you've got 50 to 100% gainers in 3 to 6 months, it's just wise as a fiduciary to diversify your portfolio and put it in areas in healthcare, companies like a J&J or a CVS. CVS trading at 8 times earnings. J&J solid earnings, international. We're also looking at companies that are going to benefit from a lower dollar. I mean, as rates are increasing, rest of the world faster than we are here, we want to benefit from those type of companies as well. So I think a diversified approach here and looking at fallen angels. Sorry, Joe.
No, we've got some crazy.
There's somebody
got some crazy sounds.
Sarat. It sounds awful. And
sound effects.
Yeah.
Special sound effects for you, Sarat.
I said I wish I hadn't eaten that. Oh, Sarat, that's not me. That's crazy sound.
It's not me.
No, it's not. Yeah. Well, I don't know. Hey, Sarat, do you do asset allocation? I mean, do you do 60, 30, 10? Do you do anything like that at DCLA? Are you always 100% invested? I'm just trying to get an idea about whether you missed this entire rally, whether you were at a 5 in terms of bullishness. Were you at a 10? Are you surprised that we got 35% in the NASDAQ right now? Did you miss it? Did you fully participate?
We're invested according to a client's allocation. So it's not that we'll miss or try and time it. It's just based on a client's objective. So if you're in equities, you're going to be fully invested. It's if you add new capital, that's where it gets selective. So we've participated in the rally. Have we been overweight technology? No. But we've been selective as to where we own. So some of the stocks that I mentioned, the Oracles, NVIDIAs, Microsoft that we do own, it's just that I'm just more cautious and I don't want to chase some of these winners with new capital. I want to actually diversify and take some of the gains.
Do you think, Sarat, that we'll get another 50 basis points, or are you smarter than everybody else on the Fed? We're waiting to see what happens.
Yeah, I mean, look, I think if you talk to the Fed even a few months ago, they wouldn't have expected where we were now. I do think we're going to get some more, at least one more. They're doing the smart thing, which is waiting to see how the data comes through, waiting for the lag effect. But I do think that if rates keep where they are, which we think they are, we don't think they're going down in the next year. And that's where valuation is important. So a big part of the market thinks rates are really going to drop in 12 months or 18. And that's propping up some of these more kind of speculative stocks. So I think being diversified and finding areas that have good cash flow, good balance sheets is kind of where you want to be. So look at cable companies like a Charter or Comcast. I think those have some value in there. And then some of the fallen angels and financials. Look at a Morgan Stanley that has come down, but it's really much more of a asset management, wealth management firm than a pure lending bank.
Do you think breadth improves? Sarat, do you think that everybody joins in, or do you think that the high flyers are just AI hype and other things have them totally extended?
Joe, if the market goes up from here or even stays within 5%, the rest of the market has to come with it. The breadth of the market is so narrow with the 7 to 10 stocks leading. We just don't see the market going up unless the other, as I say, the generals have participated, but the soldiers haven't done anything. And if we don't get broad participation, I think the market cannot go up from here because some of the valuations of some of these companies, great companies, you just can't keep on going up, especially if the economy is slowing down, earnings are going to come down slowly, and the Fed is still raising rates.
Right. Do you think, Sarat, is your recession probabilities for 2023, has that changed? 2024?
I think if we raise rates more than 50, the recession is probably higher, but I don't think it's going to be a bad recession. It's going to be a light recession, and that's where the opportunity is going to be. So I think you can still be invested, just according to your allocation, Joe. I mean, that's the one thing we always talk to clients about, is to say, make sure you're invested according to your risk profile, and especially now where there are parts of the market that are much more volatile than we've seen, back in the last couple of years. It's a little similar to, when we were in COVID and people were starting to chase some of the stocks because they just thought, hey, like these AI stocks are just going to go to the roof. So I think you just have to be careful. There is more risk in the market, especially in select areas.